Hello beautiful blockchain people, traders and investors. Today let's analyze the price chart of S&P 500 that is currently trading at the level of 4,137. So this is the index, the American stock market index, S&P 500, and this is the monthly chart. And I want to say that we are very familiar with the price chart of S&P 500 in the major time frames. So let me remind you that since the beginning of the coronavirus pandemic, when Fed started injecting a lot of money into the US financial system, the index and of course many shares, many stocks, they skyrocketed. But when Fed announced that they will start tapering the quantitative easing, the index and many stocks, of course, their prices, they formed this local high. So now let's apply technical analysis. Okay, this is the monthly chart. Here we had a bearish engulfing. So that was the bearish engulfing that took place in September. So we know that at the end of September, Fed made their announcement. However, the price rebounded and formed a bullish engulfing, and then the price started increasing, and the local high formed in December and in January when we had a bearish engulfing. So we had a bearish engulfing here, and that was the final bearish engulfing where the monthly candlestick for January covered again with its body the previous one, so that was the bullish candlestick for December. Then we had a correction, and this is the correction. These two candlesticks for February and for March, they were almost at the same level with the same sized bodies and with the same tone lower shadow, so that was some kind of consolidation taking place within the range of this bullish engulfing here. So that was a sign that the bulls started supporting the price within the range of this bullish engulfing. However, at the moment for the month of April, we have a solid bearish candlestick, and today is the last day of the month. I mean, like this is Friday, so during the weekend the market will be closed. That's why I want to say that here we will receive a solid, probably bearish engulfing, this one. So we have a solid bearish candlestick for April that is going to cover the body of the previous one and even its lower shadow. So this is a solid bearish engulfing, and the bulls have to be really very cautious. Of course, from a fundamental point, everything is possible because the next week the meeting of the FOMC or Fed meeting, the Fed meeting will take place. That's why we can see a lot of volatility. Everything may happen. We have to be really very cautious. But applying a technical analysis, here we have this solid bearish engulfing in the monthly time frame. So we have to be really very cautious. It's a bearish sign. This is the weekly chart. So to some extent, we're also very familiar with the weekly chart. First of all, that was the solid price increase. Then we had a correction that started after this bearish engulfing. So we had a bearish engulfing here during the first days of January. The price declined, then it formed a local low here, followed by a solid bullish engulfing. So the price significantly rebounded. At the top of this rebound 3 or 4 weeks ago, a long leg dodge formed, so it could be even a shooting star because the lower shadow is much smaller than the upper shadow. So this is even a shooting star, let's say, followed by a bearish candlestick with a maximum below the previous one and a minimum below the previous one. So that was a confirmation of this potential reversal. And I want to highlight that since then there has been a sequence of bearish candlesticks, mainly with lower maximums and lower minimums. So this is a bearish signal. Moreover, if we switch to a linear chart, it's obvious that the current price, if this is the closing price for today, and hence it will be the weekly closing price, it will be lower than the previous one, and we have a local high below the previous one, so that is at the level of this local high. So it is a bearish signal, a sequence of lower highs and lower lows. So if this is a local low as well, that's why the bulls should be very cautious. Of course, once again, I want to say that next week we will have the FOMC monetary policy meeting and we can see a lot of volatility. The chart may change significantly. That's why we have to be really very vigilant. But at the moment, I want to say that definitely applying solely technical analysis, we have accumulation of bearish signals. Next, let's have a look at the daily chart. This is the daily chart. We have three moving averages. Let's start step by step. The first one is for the period of 1 month or the 20-day moving average. Since the beginning of this correction, the price has been mainly below this 20-day moving average or 1 month moving average. During the rebound, the price surpassed the 20-day moving average, but it dropped below the 20-day moving average in the middle of the month, and now it's obvious that we are significantly below the 20-day moving average or 1 month moving average, and this is a bearish signal. Next, if we add the 60-day moving average or for the period of 1 quarter or 3 months, we had a bearish moving average crossover here, so that was a bearish signal. Then during the rebound, the price surpassed both moving averages and we had a bullish moving average crossover. However, at the moment, we see that a bearish moving average crossover is taking place here. So we have a bearish moving average crossover. So if it takes place, it will cancel the positive signal based on this bullish moving average crossover, and then it will be a significant bearish signal. So let me change the style. So that's why we have to be really very cautious, and definitely the price is below these two moving averages, so the bull should be really very cautious. And if we add the 200-day moving average or for the period of 9 months or 3 quarters, we are once again below the green line, and the price has dropped below the green line since the end of January. During the bull market, the price was always above the green line or the 200-day moving average, and that's why at the moment we have to be really very cautious because we're below this moving average, and it's obvious that we're below all three moving averages. And in this case, the best scenario in the near future is some kind of consolidation or some kind of broad range consolidation. This will be the best scenario, the most optimistic scenario, if somehow Fed next week affects significantly the price chart of Standard & Poor's, because we have accumulation of bearish signals. In case of some positive scenario, we may see another rebound in the near future, and then some kind of broad range may form. However, if we see bearish pressure next week coming from after the FOMC monetary policy meeting, then this positive scenario may disappear, and then we can see continuation of this price decline. And in the 4-hour chart, let me remind you that we've been following this ascending channel or uptrend. Then the price exited the ascending channel and formed a descending channel or downtrend. Then the price surpassed the upper line and exited this descending channel. But now it's obvious that if we switch to a linear chart, that we are testing the previous local low. And if we drop below this local low, if the price drops below this local low, we will receive additional bearish signal. Definitely in this case, we may play a little bit with the trajectory of this descending channel or downtrend. So it may turn out that we will receive something like this, for example, or once again, we can play a little bit with the trajectory of this descending channel. But this is what I want to say, is that definitely at the moment we have some bearish signal and bearish signals, accumulation of bearish signals in the different time frames. That's why the bulls have to be really cautious. Of course, if next week Fed somehow positively affects the price of Standard & Poor's, then we may see a rebound. But let's wait and see what happens. But at the moment, once again, we have to be really very cautious with these bearish signals. This is just my point of view, fellas. Please share your point of view as a comment below. Of course, I wish you a very wonderful day. Good luck in the financial markets. Enjoy the weekend, and I hope to see you in the next one. Thank you for watching.